You've been very outspoken on this. I know you dabbled in trading and stocks back in, what, 1992?
Well, that's when I started, yeah. I continue to trade, yeah, so I've been trading a long time.
You do trade, but you also talk about how Wall Street has just become this game of mathematicians and how Wall Street doesn't even know, you said here, quote, Wall Street doesn't know what business it's in.
Right.
Nor do the regulators, nor do a lot of folks, but the traders do.
Right.
Explain that.
If you look at Wall Street right now, all the major exchanges, right? 70% of the volume is high-frequency trading, and it's not investing in companies. And still, they'll call themselves investors, and they'll say they're adding value to the market, when in reality, they're like hackers. What does a hacker do? A hacker looks to exploit inefficiencies or holes in somebody's network. And they might say it's for the good, they're trying to find the holes and they'll make it better, but they're still trying to break it down, right? And what does a trader do? They're not looking to invest in companies. They're not saying, I'm buying 100 shares of Coke and now I own part of Coke and I really want to see it grow. I'm going to go drink as much Coke as I can. They're saying, I'm going to trade as much as I can looking for the inefficiencies in the market.
You're talking about the incentive structure that you think is clearly out of whack. And that is something that is not really addressed at all in the reform bill, the Wall Street reform bill that is sitting on the Senate floor right now.
Correct.
It's something Warren Buffett says is the one thing that needs to be addressed.
No question, because like I said,
not.
It's the why wouldn't you? If I offered you a job and said, you're managing this $10 million, and I said, someone comes to you and said, look, if you hit this, here's an investment. It's zero sum. It's either zero or it's worth $1 billion. But if you get it, you get a $100 million bonus. Why wouldn't you?
Well, for some people, it's not all about the money.
But
for
if
everyone.
you're in that business, though, right? You're in that business. Why wouldn't you take that chance?
So, can Washington aptly regulate Wall Street?
No.
Forget it?
Forget it. Forget it. I mean, everything is reactive from regulators. If you look at high-frequency trading as an example, it's always after something bad has happened. So what was it, May 6th, that Thursday?
The flash crash.
Flash crash, right? Boom. But they can only respond after the fact. If you go back to my analysis of hackers, and this is actually going to be my next blog post, but maybe I don't have to write it now. If you go back to the analysis on hacking, right? If you're a major corporation, let's say you're Google, how do you deal with hackers? Well, you have a whole network management system in place that's proactively watching. You're watching for denial of service attacks. You're watching for aberrational activities that shouldn't be there. And you've got monitors on the screen, and you're seeing all these things happen in real time. That's the approach that regulators have got to take. They've got to build a system that says, all these active traders, you've got to report your trades in real time and have the people who are regulating watching this in real time. Because the regulations that, used to be regulation was about making it safe for Wall Street. I mean, for Main Street, rather. Making it safe so that the individual investor feels comfortable with Wall Street. That's not the game anymore. 70% of the trading, like I said, is automated trading.
How about the SEC? Aside from your personal dealings with
the
the
SEC, I can't really
which,
comment.
by the way, you came out victorious in that.
Yeah,
the
but
case
I can't really
was
talk
dismissed.
about the SEC
at all.
At all. Yeah, you don't want to make the Hornets mad.
Okay, we'll leave it at that.